Bitcoin is unlike any other asset, as we can monitor in real time the amount of profit or loss for every single investor. We can then use this data to our advantage, and historically, these signals have been some of the easiest and most effective ways to massively outperform pretty much everybody. Today, we're going to be looking at the simplest and probably most effective Bitcoin metric, and where better to start than the Bitcoin realized price chart we have here on bitcoinmagazinepro.com. Now, I'm kind of cheating a little bit because while this is an incredibly simple and effective metric, some of the better charts we have are actually derived from this. So this chart in itself, while incredibly useful, is just the main data source for other charts we'll be looking at. But what is the realized price? Well, it is looking at all BTC on the network and the cost basis for all investors. So how do we actually do that? We look at the price in USD terms of each Bitcoin when it was last moved from wallet to wallet. Then what we can do is average out every single Bitcoin transaction on the network to see the average accumulation price for each BTC. If you'd like a little bit more clarification on how we're actually calculating this and its history, just scroll beneath the chart on the site here. But if we zoom back up here, we can see that we usually see the realized price, the average accumulation cost of all BTC on the network, is usually quite significantly beneath the actual price of Bitcoin. Most people tend to be at a profit on their positions, and this is usually due to the fact that a huge amount of Bitcoin was actually accumulated years and years ago at significantly lower prices. But we can see now the realized price is currently sitting at around $31,500. So people on average have paid over $31,000 for their Bitcoin. And as we now sit above $60,000, they're probably at about a 2x on their positions. But we also get these amazing buy opportunities every time Bitcoin is beneath this realized price. If I just move myself over here, we can see every time Bitcoin dips beneath this, and the majority of Bitcoin investors, even those that have been involved in the markets for a decade plus, when they're at a loss on their positions, this really signifies investor capitulation and a really golden opportunity to buy pretty much the bottom of the bear cycle every single time. But like I said, this is actually one metric that we're deriving multiple other metrics from that are all incredibly useful. And one of those is the MVRV Z-Score. And this is using the realized cap, which is the realized price multiplied by the circulating supply of Bitcoin, and the market cap, which is just the price of Bitcoin multiplied by the circulating supply. So very similar to just the realized price and BTC price, but just multiplying both of those by the current supply of Bitcoin at that moment in time. And we can see this is looking at pretty much just the multiple of profit every single investor is currently in. So if I just remove the Z-score here and look at the raw MVRV data, we can see as this currently sits at about 2, well, pretty much bang on 2, it's in line with what we saw previously on the just realized price chart, where the average accumulation price is pretty much exactly half of the current price. So everyone's pretty much doubled their money. So certainly not a bad time to be involved in Bitcoin. But if we go back to this Z-score here, this Z-score is just standardizing the data by removing the extremes, especially early on in Bitcoin's price history, especially due to the volatile price action and non-stop accumulation distribution of coins. Maybe the data gets a little bit funky. So the MVRV Z-score kind of standardizes this using a standard deviation volatility metric. And now we can see this data gives us these really clear and obvious buy and sell zones. So the buy zones are, like we could see on the previous chart, pretty clearly indicated by when we're actually at a loss in terms of a majority of investors. When we're beneath the realized cap, we can see that this gives us these golden buy opportunities for BTC, when really we should be heavily scaling into our positions. However, once we see Bitcoin profit at 5, 6, 7, even 10 times the average accumulation price, which we've seen in previous cycles, this is definitely an area to potentially, well, definitely start strongly considering taking some profit on your positions. We can see now as we sit, well, even at our most recent all-time high, this only reached a value of about 3, whereas in previous cycles, in the most recent one, 2021, this was at a value of over 7. In the prior 2017 cycle, like we saw, it's a value of over 10, and then previously values of around 9. So when we start to see people at a 5, 6, 7x profit on their position, the average accumulation price, this is a period of time where you should very strongly be considering scaling out of your positions. And similar to the MVRV Z-score, we actually have the net unrealized profit and loss, which again is derived similarly to the MVRV using the realized cap, but then looking at the unrealized profit and losses of positions to give us the net unrealized profit and loss. So the NUPL is giving us a percentage scale to almost map out investor sentiment in that time. Once we see this value far exceeding 70, 60, 80%, this is usually a period of extreme euphoria and greed in the market. When we see people, like we see previously, at multiple X's on their positions, this is usually when people are feeling on top of the world, that it's very easy, they're making so much money. And when this sentiment is impacting a majority of investors, we should really act as a contrarian to begin scaling out of our positions. And similarly, when there's a feeling of capitulation in the market, when everyone is pretty much at a loss in their position, when the NUPL is a negative percentage indicating a majority are at a loss, then that really does indicate we should be scaling into positions, acting as contrarian to the majority of the market. Right now, we're currently in the belief or denial stage. It kind of depends on your views on where we are in the market cycle, but ultimately it does indicate that we do have plenty of room to go to the upside if this bull market is to continue. And from that realized price, we can actually manipulate the data a little bit to just isolate that, to just look at, for example, long-term holder realized price. So now we can see the actual cost basis for those market participants that have been involved in the space for a sustained period of time. And this gives us, if anything, even more refined sell signals. We can see once we're beneath the long-term holder realized price, this is an even better buy opportunity for BTC. And just like we can see the long-term holder realized price, we can also see the short-term holder realized price, which we can see follows price much closer as it's short-term holders. This is new money coming into the market. And this is one of the best metrics for accumulating on dips during a bull cycle and potentially a little bit of additional profit taking on pumps during a bear cycle. So we can see during 2016, 2017, if I just move myself over here, this metric, almost like a moving average, was one of the best levels to reaccumulate BTC on dips. Every single time Bitcoin came back and touched this line, we rebounded quite strongly before we reached our all-time high. And again, once we dipped beneath it, indicating potentially a bear market when a majority of short-term participants are at a loss on their positions, we can see that every time we bounce up and touch this line, it gave another opportunity to potentially lock in additional profits that you didn't have before, or maybe even short the market if you're that way inclined. And we can see even in this cycle, it has respected this line very well. We did temporarily beneath it just a few weeks ago, but we've now reclaimed this line and have looked to have turned it into support, which is a very bullish sign. So this is definitely a level to be watching, especially as Bitcoin continues through this bull cycle to potentially reaccumulate more every time we get any of these opportunities. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So the realized price and then subsequently the MVRV Z-Score tracks the relation between the realized cap or the cost basis or average accumulation price of all BTC and the market cap, which is just the price multiplied by the circulating supply, while normalizing the data through its standard deviation, just to remove those extreme signals we may see. And this cost basis formula can then be explicitly applied to long-term or short-term holders to give a little bit of perspective on the average accumulation price of those longer term market participants or new capital entering the markets. And when we can see the unrealized profits and losses on these positions, it really gives us great opportunities to accumulate BTC at the most opportune, best risk to reward moments, and really gives us clear indications of when we should strongly consider scaling out of our positions. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And to celebrate the launch of Bitcoin Magazine Pro, we're currently offering a free trial for all new site subscribers. So don't miss out on this limited time opportunity to try out all of our advanced features absolutely free. And let me know what your thoughts are on potentially using metrics such as these and any other on-chain charts you will be watching for the duration of this cycle. I look forward to reading and replying to every single one of them, both in the comments below and on social media. Thank you all very much for watching, and I'll see you in the next one.